India, the structural story is fine. The biggest challenge that the India market faces is valuations. India is by no means a cheap market, hence, when the economy goes through a cyclical slowdown and there are any earnings misses, they can be punished by fairly large swings in share prices. The other challenge in sustaining premium valuations is the availability of alternative investment markets. China and India are two of the biggest markets within an emerging markets portfolio. Prior to the recent sell-down, India valuations kept making new high on the argument that China was not an investable market. The perception is now being challenged on account of China low valuations and the fact that the central government in China is resolving to tackle all that is ailing China. Whether China will emerge as an alternative investment location is perhaps the most important external factor to India's market performance. Else, India is a fairly domestic-driven market and is less affected by factors such as global interest rates and US elections.
In the short to medium term, the main challenges Malaysia is facing are largely macro-driven, specifically with regards to the potential trade tariffs policies the new President Trump may initiate. Economic uncertainty, driven by global volatility and fluctuations in commodity prices, also poses risk to her export-driven economy. Currency fluctuations of the Malaysian ringgit may create uncertainty for international trade and capital flows. Domestically, even though the government has announced various economic policies, Prime Minister Anwar and his ministers must now execute on them and deliver the necessary results to improve the livelihoods of the people. Given the high public and household debt, certain necessary but unpopular reforms, such as energy subsidy cuts, have to be carried out. However, these unpopular reforms may face backlash from the grassroots population and create unhappiness among the Malaysians. To create a more resilient and competitive domestic economy that can withstand global uncertainties, the government will be looking to implement several strategic responses, including economic stimulus packages, investment incentives such as tax breaks for FDIs, skills development programs, and significant investments in infrastructure. Monetary policies can also be utilized to manage debt burden and capital flows. For Indonesia, while Indonesia's resource potential and demographics hold great potential for growth, the ability for a stable political environment and an efficient government that is able to execute policy intentions are the greatest factors for success for Indonesia. The stability of the rupiah is also paramount for growth, where a favorable current account surplus is an essential ingredient. Political stability is the most important ingredient in encouraging wealth to be retained in a country. For Thailand, in the near to medium term, the stability of the coalition government is the key to sustaining the recovery of the Thai market. Longer term, Thailand must realign its industrial production capabilities to global market demands. It needs to invest heavily in education and revamp the curriculum with the human resources that can produce higher value products and services. Thank you for watching.